Good morning. We are live right here, right now on Clubhouse, YouTube, Twitter, LinkedIn. Oh my gosh. Listen, we're going to be talking about some stuff today. Today. We're going to be talking about credit cards and how even the wealthy want to save money on interest. Oh my goodness. It's going to be fantastic. I need you to join the stage though. Come up and ask these questions because we have not been taught how all of these things work. I'm going to tell you the truth about credit cards today. I'm also going to tell you about how people of note, people who are wealthy, people who are doing well, people who are influencers are handling their debt and how they go about it. Listen, debt is not a bad word. It is not. In fact, can I share something with you about debt? Oh my gosh. Banks are the biggest borrowers in town. Yes, banks are. They borrow our money and then they put that money out to work. They make a whole lot of money with our money and then they charge us to use it. Oh my gosh. So when you take a look at the amount of money that we make and the money that they charge us, we're actually in the hole by keeping our money in the bank. So listen, folks, if banks can make money by borrowing, why can't we? All we need to do is understand the process. Okay? So listen, today I need let me pull some things up here. I need to put some things if you're watching us on I'm sorry, if you're listening to us on a Clubhouse, you want to be able to see what it is that we're doing. So I'm going to put the link in the chat so that you can see what's going on. If you're watching us right now on YouTube, Facebook, all right, go ahead and say good morning in the chat. All right, because I want to know where you're watching us from. Okay, go ahead and put that in there. Say good morning. And oh, listen, did you catch the debate last night? Oh my gosh. I know I'm not a political show. Oh my gosh. But somebody got their behind spanked last night. I'm not going to say who. All right. But somebody got their behind spanked last nighted. And it was so funny. All right. So I enjoyed every bit of it. All right. So listen, I've got an announcement here. Could you it's going to be silent for just a second. Okay, I see you from Michigan. Listen, I'm from Michigan. I'm from Battle Creek, Michigan. I grew up there. I got to go silent for just a second. I got to see what's going on with my Twitter account. Oh, okay. All right. So, I just found out. To go live on Twitter. Elon Musk wants me to pay him. All right. You got to have a premium account to go live on Twitter now. So Elon Musk wants me to pay him. So what do you guys think? All right. I'm going to ask you, the audience, right now. Let's go to the comment section. For us to go live on Twitter, should I have to pay Elon Musk? Because you see how social media works. Okay. Nothing's free in this world. So when you hook your wagon to social media, they get a lot of data and then they sell that data or they sell advertising based on the number of subscribers that they have. So Elon is making a lot of money already. So do you all think I should pay him? Come on, tell me. All right, okay, somebody raise their hand. All right. Let me pull this person up. All right, let's start the conversation there. Okay, I think that's interesting. All right, Ken, come on up. All right, Ken, what's up?
Good morning, John. Good morning.
Good morning, man. Did you hear that? Elon Musk wants me to pay him so I can go live on X. What do you think?
I mean, you the one got the content. He should be paying you.
I love it. That's right. He should be paying me. All right. I got the content. All right. We're bringing people to the platform. I like that. So how you doing, man? What's up with you today?
Just got the kids off to school. About to see what your day brings.
All right. Billy Thorpe wants to come up to the stage. Okay. Listen, Billy, what do you think? Should I be paying Elon?
Yeah. Hey, what's up, Ice? Yeah, I think you got to. If he requires you pay him to go live on his platform, you got to pay him.
I gotta
It's his
pay.
business. He paid a lot of money for that company. He needs to make his money.
Oh my goodness. Oh my goodness. So Elon needs my dollars. Is that what you're saying?
I don't know about Elon, but X probably does.
Listen, because you know what's happening. You know what I heard, right? That a lot of advertisers are leaving X. Does anybody know anything about that? Okay. Mike Brown. Listen, Mike Brown says ads, organic reach started for basically free for many years. Okay. And others have slowly started to require a fee, and they are continuing to increase. Listen, and they put increase in all caps. Mike Brown, listen, man, I wish you could come to the stage. Can anybody else want to come to the stage this morning? Raise your hand. Come on up. Let's talk about it. Listen, I'll even spend a few minutes. I know I shouldn't say this, but if you want to talk about the debate last night, I'll let everybody who wants to say something about the debate last night say something. Okay. All right. Okay, Fatima. She can't wait. Oh my goodness. Let's get some more people up on the stage this morning. Yes, sir.
I don't got a plan for Medicare, but I got a concept. I got a concept, but I don't got a plan.
All right, talk. You don't have a plan, but you got a concept.
That's what Trump said last night about Medicare.
Okay. No plan, but a concept. Okay. He's gonna fix healthcare. All right. And listen, how many years has he had to work on it? All right. And he was supposed to replace it when they had something better. But listen, I don't. He has the time, but you know, maybe fixing healthcare is a little bit harder than they thought. What do you think? All right, Minerva Williams on Facebook. Here's what she says: no, there's other way people can listen to you. I'm not watching you on that app. Thank you, Minerva. I appreciate that. Okay. That's Minerva watching us from Facebook this morning. Fatima, how are you this morning?
I'm well, thank you. Good morning, everybody.
What brings you to the stage?
I'm just here listening to what you guys are saying.
Oh, and listen, thank you for coming, because see, listen, when people see that you're here, you're actually you're actually asking people to come into this room just by the fact that you're here. So I do appreciate you this morning. All right. Fatima, where are you from?
Thank you. Miami Beach, Florida.
Miami Beach, Florida. You know, folks, listen, I'm going to be posting some things soon. I'm going to be in Orlando in July, probably the last Friday in July. So put that on your calendar. P.I.L.L Method Live is going to Orlando, and we're going to do a whole day in Orlando. And we're going to break this thing down, tell you the truth about how lending and loans actually work. Come on, Mike. Come on up. All right. Come on up, Mike. All right. Kid, I'm gonna make you moderator. So if you can kind of keep an eye on the stage for me and help bring some people up, that would be great, great, great. Mike, I asked you to come on up. Come on. And let's see, invited you up. Anybody else? Come on up. I'd like to get as many people talking as possible. I'm going to also invite some people who want to come on live on YouTube. I'm putting that link in the chat on YouTube. So if you want to come live on YouTube, just click that link. And this link works in Chrome. So if you click that link, you can come in on Chrome, and then you can come into this, you can come in to the show, into the studio audience. Okay. And check us out there. All right. So anybody else want to come to the stage? Juan, I see you, man. What's going on with you today?
Well, today I'm resting. I just I'm doing some health issues today, and so I'm just capitalizing on. I could still hop on a podcast or something like this where I could still work on myself while healing. So that's where I'm at right now.
Well, listen, man, I appreciate you healing here, okay? Because we're going to be healing some finances today. We're going to be we're going to be telling the truth about credit cards today. You know, credit cards, people think that they've been led to believe that credit cards are evil. And I want to tell you right now today that they're not, but we're going to show you some numbers today. What do you think about that one?
Hey, I'm game.
All right, Mike. Listen, we're trying to pull you up, Mike. I see you got your hand up. So come on up. We're trying to pull you up. Did you try to pull him up, Ken? All right. Anybody else? Raise your hand. We're going to be talking about. Okay, we're going to be talking about credit cards today. So we're going to tell you the truth about how to figure them out, what to do with them, and how that particular interest compares to other types of interest. Okay, because you're going to pay interest. We just need to know how to do it and how to pay less. Okay, so let me pull my information up here. Let's get it going. All right. So I also need to get my link here. Okay. I'm going to do this. We're going to share this. All right. Copy that and share it in. All right. Let me put that here. Here is the link. That's the link if you want to watch us on YouTube. Okay. That's the YouTube link. I'm also going to put how to get in touch with us at the top of the page at ice10k.com and link. All right, let me see here. Let's see, ice, the number 10, the letter K.com. There we go. And there we are. Okay, that's how you get a hold of us. All right, so there's a lot of information on there, especially the information on how to get a savings and earnings report. All right, so if you want to know more about a savings and earnings report, meaning how you can cut your interest cost by 75%, how you can know the month, day, and year you can be debt free and get it for free. This is a free savings report. Okay, we're going to be giving out some free stuff today. Okay. How many people want some free stuff? Listen, you can go to my website, PILLmethod.com, write it down, PILLmethod.com, and you can get a free copy of my book. Okay. You can get a free copy of my book. A free chapter of my book. If you go to go to ice10k, come on down, go to PILLmethod.com, scroll down, and you can get a free chapter of the book. All right. Now, here's what I'm also going to do. I'm writing down the number 5. The number 5. And why am I writing down the number 5? I'm writing down the number 5 because the first 5 people that ask a question about credit cards will get a free copy of my book mailed to them. And if you're in the US, not outside the US, if you're in the US, we will pay the shipping. You get a free copy signed by me, okay? And 5 people that ask a question either in Clubhouse or online, type your question in. The first 5 that ask a question about credit cards will get a free copy of my book. And if you want to see the book, you can go to Amazon.com and you see what we charge for the book, okay? And we have no need to reduce the price because people are still buying the book. It has been a bestseller at least 6 times on Amazon. So you can get a free copy for asking a question. All right. Okay. So Juan says, what's the fastest way to raise your credit score? Well, that's a credit score. That's a credit score question. That's not a credit card question. Okay. All right. But we can talk about the fastest way to raise a credit score. All right. So one of the ways to raise your credit score. All right. Let's see. Sharika says, all right. Let me see what you say, sweet. Let me see here. Sharika says, are there any real benefits to secured credit cards? Yes, there are. Yes, there are. Now, if you ask a credit card question, oh my gosh, here they come. Okay. I'm sorry, Shakira. Listen, forgive me. I'm watching 4 screens. All right. And I'm a little dyslexic. So I'm sorry. All right. I hate it when people pronounce my name because there's no S on my name. And they say Daniels all the time. So Shakira, thank you so much for correcting me. I appreciate it. Okay. So listen, I've got some questions here. So I've got Shakira has a question. All right. I got to write this down or I'll forget. All right. And all right, Ken has a question. That's 2. Sheila has a question. All right, that's 3. Juan has a question. All right, that's 1, 2, 3, 4. Okay, 4 so far. Now, you already asked your question. All right, so now what you want to do is click on my profile and you will see my Instagram. So what I would like you to do, you don't have to, right? But what I'd like you to do is share one of my videos, right? Share one of my videos. You don't have to do it to get the book, but you do have to put send me your address. All right. So Shakira, send me your address. Ken, send me your address. Sheila, send me your address. And Juan, send me your address. Okay. You can send me your address using IG. All right. DM me in Instagram. Send me your address. Now, let's get to the questions. All right. So Juan asked one question, but he asked another question about credit cards specifically. But let's start with the first one: how to raise your credit score. Okay. Now, there's a lot of information on how to get good credit, how to raise your credit score, how to get credit. All right. There's a lot of information out there, even on this app about it. But let me tell you something. No one. I mean, in the years that I've been on Clubhouse, no one has really talked about what is the best way to pay these things back. They talk about how to get it, but they don't talk about how to pay it back. Did you know you could actually pay it back way cheaper than what they're suggesting? So one of the ways to raise your credit score, if you're talking about credit cards, okay, is make sure you're paying on time. Okay, that's going to be number 1. Then the next thing to do is this: you want to make sure that you stay. If you want to raise your credit score for any reason, okay? Okay, now let me go on record saying this. I don't need to raise my credit score. I just need to be approved for credit. You want to actually focus on your credit profile, okay? On your credit profile. That's what you need to focus on to make sure that you can get approved for credit. Now, one of the reasons why people want a lower credit score is this. They want, I'm sorry, they want to raise their credit score is so that they can get a lower interest rate. And if you've listened to any of my shows before on YouTube or watched any of my videos on Instagram, you know I don't care about interest rate. I don't, because we care about what it costs to manage the debt. We care about what it costs. So you want to focus on interest costs. And I'm telling you, I can manipulate how much interest I pay a lot better with higher interest rates than lower ones. I mean, it's true. All right. But here's one thing you can do. All right. And Shakira asked another question. I see you. All right. So we're going to get to all of these questions about credit cards today. I wish I could get somebody to come on stage and talk to me about it. Okay. All right. So you don't have to, let's come on stage. Let's have a conversation. I do much better with a conversation. All right, Billy, you got a question, a comment?
Well, yeah. So last year, my wife and I, we found ourselves in this situation of having about $20,000 in credit card debt.
Right.
And I went on this like just tear to figure out like how do I pay this thing off. And so I discovered the velocity banking method, and I'm just curious is there a major difference between. So we did that. So we ended up paying off actually over $27,000 in credit card debt, and then so we've had a lot of success with that. So now we understand this velocity strategy. Now we're looking at leveraging our home, doing home equity line of credit, anything with a line of credit. I'm a huge fan. I'm not a fan of loans anymore. I'm probably never going to get one again if I can help it, from my little understanding. But what's the big difference between P.I.L.L and velocity? Are they very much the same?
No, they're not. They're not the same at all. And here is what I want to ask you. All right. So when you were paying off that debt, and congratulations, by the way. All right. Did everybody give him a hand? All right. For paying off his debt. All right. Because that was fantastic. We appreciate you for that. So here's what I want to do. Is give you a hand for that. All right. So thank you for bringing your question to the stage. So velocity banking, using what they call debt weapons, taking money from one line of credit and then using it to put on a different line of credit, can lower your interest cost. But here's the thing. When you did that, Billy, did you ever know how much interest you were actually saving in dollars and cents?
Well, okay. So first of all, I didn't do that. I didn't take from one debt to another debt.
What did you do?
One line of credit.
Talk to us about it.
What I did. Yeah, no, it's fine. So first of all, what we had to figure out was what is our numbers. What's every dollar coming out of our pocket every single month.
Right.
And then out of those numbers, what is the non-negotiable cash money that we have to have in the bank? So our home, our car loan, things we couldn't pay with a credit card. Once we figured those two numbers out, we figured out, okay, do we have cash flow? Because that's what matters most.
Yes.
Because that's what pays off debt is cash flow. And so we're like, okay, we have cash flow. Let's do this thing. So what we did was we took our highest interest rate credit card, which I was paying a daily average interest rate of about $10 a day. Had a maxed out $10,000 credit card bill. Well, do the math. My payment was $300 some bucks. So was the interest every month. Not getting anywhere.
Okay.
And so what we did was every 15 days, we kept all the cash money that was non-negotiable, like home, mortgage, car, whatever we couldn't pay with a credit card. We left that money in the bank.
Right.
We took all of our other money, all of our savings, everything that we had, dumped it onto the credit card. Well, that brings the daily interest rate down. Well, then we use the credit card throughout the month, which obviously goes up, but it doesn't go up as much because that cash flow is sitting on that debt tool and it's sitting on that credit card, but we're able to put in and take out, put in and take out. And so that was basically what we did. We did this several times. And what we ended up doing, which is where we're at now, is we have zero credit card debt. We have interest-free credit cards. So we've been basically just doing cash back and like basically getting paid by Wells Fargo to use their free money.
I love getting
kind of
paid. I love getting paid to use their stuff. Don't you? Don't you love
one of my favorite things.
Come on, man. I love it. So folks, I listen, I see what you're doing. So you did a combination of the avalanche method, starting out with your highest interest rate cards, okay? And then taking your leftover cash, your discretionary income. That's what we call it here at the P.I.L.L method, discretionary income after all the bills are paid, and then dumping that cash on the credit card. Now, it does two things, folks. When you do that, okay, he was looking at that as the same as depositing money in his checking account and paying his bills, all right? But instead of a deposit to his checking account, he made a deposit to his credit card. Now, did the credit card company look at it as a deposit? No, they did not. They looked at it as a payment. So, Billy, on that particular card, you never had to make a minimum payment. You were never late because you always gave them more than they asked for. Is that correct?
100%.
100%. Okay.
100% correct.
So now, every month on a credit card, see, when you pay on a credit card, the credit card interest is calculated on the average daily balance. It's not the same for a mortgage, okay? But the credit card interest is on an average daily balance. So even if he looked at his minimum payment on the card, all right, if all he wanted to do was make the minimum payment, do you realize because he lowered his interest cost, that interest rate, by putting his income on the card and then spending and then paying for his bills with the card, he lowered his interest cost that month. Because let's say he had like a $10,000 balance and he could put $3,000 on the card. Well, I don't care if I have a $10,000 balance, but if I put $3,000 on the card, they can only charge me interest on $7,000. Is that right, Billy? Okay, so he is practicing interest cancellation. Come on, Billy. Is that true? You put that money on there. If you owe 10, but you put 3 on, they can't charge you interest on 10, can they?
That's right.
Okay.
That's correct.
All right.
And then, yeah.
Go ahead.
And then I have access to use it again. And then I get access to use the 3 again.
And listen.
And rinse and repeat.
Rinse and repeat. What he's doing, folks, what he's doing here is that money is actually working for him, and he's actually making money. Oh, Don, how can you make money with a credit card? A penny saved is what, Billy? A penny saved is a penny earned. So let me give you an example of this. If you have a credit card, what was the interest rate on that credit card, Billy?
Oh, it's embarrassing. I had horrible credit when I got it, so it was like 29%.
29%. Okay. All right. Remind me to tell you how you can make a 29% credit card work. Okay. I quite like the fact that it is a high interest rate because it can be, you can manage it to become a low interest cost. All right. So 29%. So now when he put his money on when he put his money on the debt, instead of leaving it in the checking account, how much do checking accounts pay, Billy?
I don't have that much money, so mine doesn't pay anything.
Doesn't pay anything.
Don't pay debt.
So if you left your money in your checking account, okay, it pays you nothing. Okay. But if you put your money on the credit card at 29% interest, then they can't charge you 29% interest. And the month before you did that, you paid all the interest they were asking for. Okay. When you started doing that, you got an instant raise. Why? Because you did not have to put the same amount of interest on the card that the next month that you use this system. All right. So if you saved yourself $10 or $20 or $30 in interest you didn't have to pay, that gave you $30 you could spend somewhere else. That's a $30 raise all day. Okay. Do you all understand what he's doing here? Okay. So by using his income and putting it on the credit card saved him interest. But here is where we that system and the P.I.L.L method differ. With the P.I.L.L method, we would tell you, we would prompt you to put X amount of dollars on that debt. Okay, we would tell you exactly how much to put on that debt and how much interest you are actually saving. So, Billy, let me know. Let me ask you this. If you knew you could save some interest, even a lot of interest, that would excite you, wouldn't it? Billy? Okay, maybe he walked away from the mic. But anyway, but here's the thing. You don't want to save.
Yeah, I'm sorry. Sorry about that. My Wi-Fi dropped out, so
Okay.
back.
All right. So if you could save some interest, right, or a lot of interest, that would excite you, wouldn't it?
Yeah.
Okay.
Yeah, hopefully don't plan on paying much.
All right. So what if you could save the most interest that's mathematically possible for you using the money that you have available? Okay. Using that money strategically so that you could save more interest per dollar that you were putting on that card. Would that even be more exciting?
Yeah. So when I had interest, that would be great, but I don't have any interest now.
Yeah. You don't?
No.
You
No.
don't?
We switched over to.
You don't have you don't have a mortgage?
Well, oh yeah. Okay, so I'm sorry. So yeah, I thought you were talking about credit cards. Yeah, mortgage. No, yeah. So mortgage. Yeah, that's what we're about to start doing too. To pay that down.
So here's why I'm talking about this, Bill, because this is very, very, very important. I'm going to put some things on the screen so that I can answer your question. But I wanted to get out there and I wanted to first give you your kudos for attacking that card and knocking it out. Number one. And then using a system and using it consistently. That's number two. All right. And then getting success. And now you're moving on to something else. But here's what the P.I.L.L method wants you to know is that you want to move the right amount of money in the right month on the right day of the month to the right loan. Okay. So this is very, very important. So if you knew that you could save $5 in interest for every dollar you placed on the card, that would be great. But what if you put a certain amount of money on the card and then your interest that you could save dropped down to $4 for every dollar? Would you want to save $4 in interest for every dollar if you could save $5? You see what we're saying? That's what's important because it is the interest that makes the debt long term. Okay. It is the interest cost, not the interest rate. I will repeat this. It's the interest cost, not the interest rate. That is the problem. So we need to be able to measure how much interest we are saving per dollar when we make a move. Now, because Billy was saving some interest, he got out of debt. Okay. But what we at the P.I.L.L method, we get out of debt more efficiently. We don't get out of debt fast. We get out of debt cheap. How do we pay the least amount of interest that's mathematically possible? Billy, you are getting ready to learn how to go to the next step. You're saving interest. Now we're going to learn how to save even more interest. How would you? So that is the difference between what the velocity banking method and the P.I.L.L method, because the P.I.L.L method uses algorithms, uses AI to say, how do we save the most interest by putting the least amount of money we can on a particular debt to save the maximum amount of interest per dollar. That's leverage. Leverage means, what is the least amount of effort I could put into something and get maximum output? Does that make sense, everybody? Does that make sense to you, Billy? Okay.
I'm listening.
Okay.
I don't know, because my thing was like, I want to do this quick. I don't want to pay any interest.
All right. Well, see,
that was my whole thing.
I understand.
So that's why we went velocity and went fast.
Yes, but here's the thing, Billy. Do you know how much interest you saved?
Well, I would say that I saved, depending on how long it would have taken me to pay off that debt with minimum payments.
Yeah.
I was saved over $6,000 per year. So I don't know how many years, according to the to the snowball guy. I won't say his name.
I'll say it all day. It's Dave Ramsey. I'll say it all day.
Dude, it's gonna take me 25 years when I did the calculation with his method.
Okay.
I'm like, it ain't gonna work.
All
This
right.
is crazy.
Well, so Billy,
I did it in 6 months. We did it in 6 months.
Good. So what you're doing is you're contrasting doing nothing except paying the minimum payment and then accelerating the payoff. Okay. What I'm asking you to do, take a look at, is not just make minimum payments. What I'm asking you to take a look at is there something you could have done to save even more interest and got out of debt even faster than the 6 months with the money that you had available? If there was a way, would you want to know? Okay, Billy gives us a thumbs up. All right, so let me give you an example of what we're talking about, Billy. I'm going to listen. Everybody want to go to your screens right now. Go to your screen so I can put it on the screen. And I'm going to give you an example of somebody that is taking their credit card, okay, moving it over to a 0% card, all right, and they have a mortgage. So let's put in, all right, I'm putting this on the screen. All right, take a look, everybody. We're adding it to the screen, and I got to change this over, all right, let's change this right quick. All right, there we go. Boom. All right, so we're going to put in Billy said, okay, 20. I'm putting 20,000. Okay. 20,000. All right. And so we have 0%. Okay. We got 0%. All right. Boom. And we're going to put in another card, duplicate that. Okay. And put another one in at 20,000. And we're going to put this one in at 29%. All right. Now, all credit cards. Now, what I'm using here is Brett Whistle, B-R-E-T. And you can do this on your own. And his last name is Whistle, W-H-I-S-S-E-L, Brett Whistle. All right. So we're going to put in 20,000, and we're going to put in that 29% credit card. And all credit cards are amortized over 240 months. So when you're putting in the number of payments in here to figure out the interest cost, put in 240. Don't leave it at 360 because all credit cards use this number to figure out their interest cost. All right. And then what they do is, I put too many zeros in here. Hold on. Let me delete that. I was talking when I should have been typing. All right. There we go. Okay. Now, here is the interest cost on that. Okay. The interest only payment is $483.33. Okay. $483.33. All right. So it says MQ. There's a link in the chat. Let me put that link in again. You can go to YouTube, look, search P.I.L.L method, and you can see this. But I'm going to put the link in the chat again. All right, there we go. There it is. You can see this on YouTube. You can see this on Facebook. All right. But if you see it on YouTube, will you please go ahead and subscribe? We're trying to get to 10,000 subscribers. All right. We're over 8,000 now, but we're trying to get to 10. So go ahead and do that so you can see this, these examples for yourself. Now, here is what, and Billy, stop me at any time, interrupt me at any time to ask a question, okay? Because I want to make sure everybody gets this. All right. All right. All right. So now we've got 20,000 here. And if I'm looking at this, it's going to cost me $483 a month. As I start to pay this down, it's going to cost me less per month. Okay. Now, what a credit card company does is take a regular amortization schedule. All right. And then make sure that they add a certain percentage on top of what the amortization schedule says. They will add another 1 to 1.5. Some do 2%. It all depends on which credit card company you're using. Okay, because right now, if they used a regular amortization schedule and did nothing else, all right, it would take 20 years to pay off this card. All right. So, okay. All right, Billy. Thanks for being here, buddy. All right. You gave us a question and we're going to finish it out. So here's what we're doing. If you have $483.33, all right, and that you're paying and that you're trying to avoid, all right, by putting it on a 0% card, let me take a look at this. Okay. I had somebody call me and say, you know what, Don, I'm paying 0% and I'm taking that money. I'm just making, but I'm putting about $1,500 a month on this card while it's 0%. So I can knock it out. All right. That is how most people look at this. All right. Can I get an amen on that? All right. If they have some extra money, they're putting that extra money on that 0% card and knocking it out before the bank can charge them interest. But if they had even 29%, okay, 29% interest, the most would be $483.33. See, you got to know how much you're working with before you can make a decision on what to do about it. So, in other words, if he was to pay this card off, if somebody were to pay that card off in just 1 month, congratulations, you just saved $483.33 you didn't have to pay. But let me show you something here that we don't think about, okay? So I'm going to put in, I've got this mortgage here. It's just $176,000. I've got a really low interest rate here of 2.49. The payment is $697.57. All right. Now, the interest rates now are a lot higher. Right. But I'm using this low interest rate to make a point. And then I'll put in a higher interest rate on this mortgage. $176,000. All right. I want to show you something. That the $1,500 Okay, so somebody called me and says, I'm putting about $1,500 a month on while it's at 0%, so I can knock that out. I want to show you something here that if I prepay $1,500 on my mortgage, okay, let's call it $1,300, okay, because it's just simple to show. All right, I put $1,300 on this mortgage. Do you see it knocks off 4 payments I never have to make? Do you see how much interest it saves, even at less than 3% interest on the mortgage? It saves $1,400 in interest on the mortgage. $1,400 interest on the mortgage. How much interest are they paying on their 0% credit card? That $1,500 going to the credit card. How much interest are they paying on the credit card this month? All right. Talk to me. Somebody talk to me. How much interest? 0 interest. The credit card is now free. So what they're doing, folks, is they're paying off a free debt because we've been made to focus on the credit card and feel good about the fact that we're not paying any interest on the card, and we can pay off $20,000 and save this $400 in interest that we don't have to pay. Do you see what I'm saying here? So if we take a look at paying off the credit card, okay, I see Jonathan Bing in the house. Daphne just came in. How you doing, Miss Daphne? All right. So, Jonathan didn't moderate you, but I will, because I don't know about Jonathan. I like you, Daphne. I don't know about Jonathan.
I like you too. Thanks, Don. I can always count on you.
I know you can. All right. So I want everybody to see what we're doing here, because we are taught to focus. Okay, I see Charles Quarles. He's coming online with us. We're going to add him to our conversation. So I'm sorry, Mark. All right. So Mark, let me bring you to the stage here. Mark, how are you doing? Go ahead and unmute. All right. Well, maybe he's not ready just yet. Okay. All right. So Mark is in the house. He's watching us on YouTube, and he came into the studio audience. All right. So Mark, thank you for being here. And so, all right. So when you get a chance, you can tap in and say something. So folks, we are taught one way to look at credit cards, like credit cards are evil, when all we have to do is we've been conditioned not to do the math. So let me ask you something. All right. And I need you to put it in the chat today. All right. If I look at paying off this credit card that is now free, I'm not paying any interest. All right. I'm not paying any interest on the credit card right now, but I'm taking my hard-earned money to pay off a credit card that's charging me nothing, when I have a mortgage that's charging me $300 a month interest right now. Okay. So I can take $1,500 and put it on the credit card. I could take $1,500 and add it to my principal on the mortgage. So here's how I would use the credit card. If I had 0% interest, I would pay minimum payments on the credit card. I would take the $1,500 that I was putting on the credit card, all right, and then put it over here to save more interest. Can I show you, even at 2.49%, how much interest? Let me go down to cumulative principal, $20,000. $20,000 on this mortgage knocks off 57 payments and saves $19,000 in interest. Okay. So would I be better off if I leveraged the credit card money and put it on my mortgage to knock off over 4.5 years off my mortgage using Visa's money. Does that make sense, anybody? It's called arbitrage. Does that make sense? So any comments on that? All right. So this is why I wanted to tell you the truth about credit cards, because we focus in the wrong area. Now let's change this interest rate to something that is more today. I'm going to put in 6.5% on this mortgage. All right, because that's what's happening. I use a low interest rate to make a point, but we're going to use a higher interest rate now. 6.5%. That makes our payment $1,117.36. All right, and we start out with $900 a month interest. That's what most people are doing right now. Okay, all right, they have a higher interest rate. So let me see here. I've got some comments. All right. It says, I'm listening. I'm figuring out navigation. All right. That's cool. Okay. Medicare trivia. All right. So you're in. So just unmute your mic so that you can talk. So let me see if I can unmute you. All right. I just sent you a message on, go ahead and unmute, Mark, if you want to talk to us on YouTube right now. Okay. So I want people to understand that you can use credit cards to your benefit, but not in the way that we've been taught. So if I put $20,000, so $1,500 on this mortgage, look at this. I need you to see this. $1,500, that's $1,469.86. Put that on the credit card, it knocks out $8,000 worth of interest if you put it on a mortgage instead of on the credit card. So if you have other debt, if you have a mortgage, be careful which debt you pay off, because you need to be looking at how much interest you're saving while you're paying off the debt. All right. Does that make sense, everybody? All right. So Mark Quarles just sent me a message here. All right. You go, listen, that's fine, Mark. All right. Whenever you want to say something or ask a question, please feel free to go ahead.
All right. Thank you. I got you.
All right, man. There he is. There it is. All right. Finally, I got somebody to come into the studio audience. All right. Here on YouTube. All right, Mark, go ahead and make sure that you subscribe to our YouTube channel. We'll try to get to 10,000. Thank you.
All right.
All right, ladies and gentlemen. Listen, so I hope that kind of answers that question. Let me take a look at other questions here that we have about credit cards. All right. And let me go back. Now, remember, I got Shakira, Ken, Sheila, and Juan who asked a question. That's 4. I need one more to ask a question so that they can get a free book. Go to, let me see. Let me see here. Okay. All right. Richard, did you ask a question? Huge congrats. Okay. Mike Brown, another strategy. Okay. There you go. All right. I'm looking for there we go. All right. So I'm looking for the 5th person to ask a question. So let me go back, and so don't make me read it. If you can come to the stage and ask it, that would be a lot better. Okay. Shakira says, are there any real benefits to secured credit cards? Yes. There's benefits to secured credit cards. You know, my niece, who is she's a vet now. When she was here at Oakwood University here in Huntsville, Alabama, she lived with us for a while she was in undergrad. And she would hear me in the mornings talk to people about the P.I.L.L method, and she was just starting off getting credit. What she did was get a secured credit card. So I advised her to go ahead and get a secured credit card. She did. And then by the time she graduated, her credit score was over 700. She could get a unsecured credit card and then start using those cards efficiently and masterfully until she's now graduated and she is a vet, and they're buying their first house, and they close on the 20th of this month. She's getting married and buying a house. It all started with a secure credit card. So definitely there is a benefit to secured cards. I hope that answers that question. All right, because that's how my niece got started. And now she's buying a house. All right. Love it, love it, love it. Oh, she's also on the P.I.L.L method, and she'll be able to pay that off in about 7 years. Shakira said, thank you. You're so welcome. Go ahead and get that secured card. All right. It'll work. It'll work for you. Okay. If you want more information, become a P.I.L.L method client, get a consultation, and we'll show you how to leverage that card and make it do other things for you so that you can get some unsecured credit and learn how to leverage that as well. Let me tell you, folks, getting credit is not for consuming. Getting credit is for leveraging it and making more money with it. That's what you want to do. Make more money with that money. Why? Because that's what banks do. I love the bank. I love the bank. I just don't pay them 75% more interest than they need to get from me. All right. So, and I teach other people how to do that. So, anybody else got any more questions? Come to the stage here in Clubhouse. If you want to, you've got a link here in on YouTube. You can click that link and come into the studio audience as well. Let me see if let me talk about some other questions I have here. All right. So, what is the best? All right. Juan did have another question. Oh, okay. Wait a second here. Sheila, you were next. How can I reduce rates on credit cards? That, Sheila, is a good question. Do you realize a lot of people don't even call? Now, I don't care about interest rates. I only care about interest cost, and I can manipulate interest cost. But if you're at the place where you want to manipulate interest rate, let me give you a particular scenario, and it'll usually go like this. If you have never been late on your credit cards, okay? And let me tell you something. If you're late on one, all right, it will report to the others and it'll cause you a problem. All right. So if you've never been late, or if you have some lates that are way, way, way in the past, okay, here's what you could do. Call up your credit card company and say, listen, I have been with you X amount of years. I've never been late. I pay my card all the time, and I have this high interest rate. Can you lower the interest rate? The person that answered the phone that you're talking to, okay, the person that answered the phone has on their screen what they can lower your interest rate to. So you ask them, can you lower the rate? And if you qualify for a lower rate, then they will tell you, here is the rate we can give you. Let me give you a little speech. So then ask them, well, thank you very much. That's great. But can you do better than that? You want to remember that phrase, ladies and gentlemen. Thank you very much. I appreciate that. But can you do better than that? Sometimes there is even another offer to lower the rate right there on their screen. You see, the person that you're talking to cannot arbitrarily lower your rate. It has to be on their screen. It's done by algorithms, and the algorithms put that on there, but they never give you the best thing first. So they give you one thing and you ask for another. And then they said, oh, let me take a look. And said, you're in luck, Mr. Jones, Mrs. Jones. We can lower your rate to here. And it says, oh my gosh, thank you so very much. But can you do better than that? And chances are they can't. Okay. That's as far as you can go with that. Because the first person you ask can only go so far. Then they'll tell you, you know, that is the best we can do right now. When they say we, they're talking about Visa, they're talking about MasterCard. You think they're speaking for the entire company, but they're not. What they're doing is, what they're really saying is, that's as far as I can take you. That is not as far as Visa can take you. That's not as far as MasterCard can take you or Discover Card. That's as far as that person is authorized to take you. So then you ask very politely, thank you so very much for helping me. Thank you for lowering may I speak to a supervisor? Thank you very much. And then you get to a supervisor and you say, listen, I just talked with your person, Carl, there. And Carl was so kind to lower my interest rate to here. And I've been with you a long time. Is there a way you can lower my interest rate? Is there something else you could do for me? All right. Is it possible to get even lower rate? And that supervisor may be authorized to give you an even lower rate than Carl could give you. Okay. I've done that several times, and that's usually how it works. So take that information. Now, remember, that first person that answers the phone may be able to lower your rate a couple of times, and then go to a supervisor, and you might be able to get it lowered a third time. I hope that helps. All right. Okay. Let me see. All right. So we talked about that, really benefits. Why is interest rate so high? All right. It could be high for a number of different reasons. It could be high because of a number of different reasons. It could be because how the economy is running right now. It could be because somewhere along the way that you have increased your balance above 35%, even on another card, and where you have been okay with this particular card, that could even raise your rates because of something you did on another card. Also, if you increase your balance to a certain point, okay, on this card, so I think it's above 35%, they can also raise your interest rate on the card. And especially if you're late, then you could get what's called a penalty rate. So that gives them the opportunity to raise your rate. Okay. But no matter what your rate is, you can pay a lot less interest if you just know how. One of the things that we talked about was what was that other guy that came in here? One of the ways that we could talk about that is putting your income on the credit card and then paying your bills from there. That will lower not your rate, but your interest cost. Okay. Now, let me tell you something about minimum payments. Everybody's heard that I shouldn't make minimum payments on my credit cards, right? Yeah. But they take it too far. If they have, let's say you have 5 credit cards with a balance, what most people do that I've run into, they pay more than the minimum on all 5. Don't do that. Don't do that. It'll take you forever. It's not getting you anywhere. Listen, can I get some amen, some fire emojis, something, put your hand up. Let's get some hearts, whatever. Have you ever seen that or done that? You put more than the minimum on more than one card. Has anybody ever done that? Okay. So here's what I'm saying. Instead of doing that, just pick one. Take all the money that you were putting on several and pick one, and put all the money on one. Put that extra money on one and pay the minimum on the others. You will see that one melt away so fast. And then you can do it to another one. Okay? There you are. These are some things you can do for free. You can do this for free. You don't have to pay the P.I.L.L method a dime for that one. Okay? But if you wanted to use the P.I.L.L method, we would show you how to pay the least amount of interest on all of your cards and be debt-free, not only on your credit cards, but your mortgage, your credit cards, your car loans, and your even student loans in about 7 to 9 years. Listen, folks, I want to play you something right now because, hey, Cheryl. Come on, what do you got there, Cheryl? What do you got? She says, good morning. Most people know when to use a credit card, but they do not know when to use it. When not to use a credit card. When don't you use a credit card? Let me tell you, you don't use a credit card if you don't have the cash to back it up. Credit cards are for convenience. They're not a replacement for money you don't have. Please use your credit card if you can afford to pay it off. If you can't afford to pay it off, don't use the credit card. Okay? Does that make sense, everybody? Okay? Don't put yourself in a bind. Now, some people, let me say this. Let me say this. Okay, because there's always a caveat. There's something very important that I need to do. Okay? Let's just say there's a medical emergency. And for some reason, I don't have insurance. I got a medical emergency for myself or a family member. And I don't have the money and I don't have insurance, but I do have this card. Well, shoot, I'd use that card all day and worry about how I'm going to pay it back later. Okay. There are certain situations where I would use credit, even if I didn't have the money, because it would cause suffering and pain. And, it's just the alternative of not using the card is way worse than not being able to pay it off. Okay. Because what's the worst they could do to me? They could shut it down. They could give me 30 days, 60 day, 90 day late. All right. And my credit score drops. But my family member was able to be helped because I was able to pay for the medical procedure with this card. I'm okay with that. Most people would be okay with that. So don't feel bad if that's your situation. What I am saying is don't use credit to go out and buy something that you're not even going to be using 2 or 3 years later with money you don't have. That's what I'm saying. Okay? Cheryl, listen, thank you very much. Cheryl's giving me 100% and she's giving me some fire emojis and some flowers. Okay, Shakira, what do you got? What is the method to have collections removed from your credit that is a question for Los. Is Los still coming in here on Fridays? I show people how to pay credit cards off. I show people how to pay the debt back. I am not a credit repair specialist, but I'll read it anyway. Okay, I'll read it anyway. What is the method to have collections removed from your credit when the credit card company or companies have already written them off? I don't know the answer to that. Los would be the one to ask that on Friday. Okay, Shakira, I'm not a credit repair specialist. My job is to make sure people pay the least amount of interest that's mathematically possible. Oh, what time does he come in? I think he comes right in at 7. They come right in at 7 a.m. Central Time, 8 a.m. Eastern. Okay. They come right in at 7 a.m. on Fridays. Okay. And they stay the whole time. Okay. They stay the whole time. I only do about 2 hours. But they stay the whole time, and they give good information on how to get credit, how to repair credit, how to maximize how much money you can get from credit. They talk about business credit. They talk about all sorts of things on that show. My show is how to pay it back. All right. Shakira, thank you very much for your question. Now, remember, if you ask me a question, Shakira, Ken, Sheila, and Juan, make sure you give me your address on Instagram so that I can send you a book. All right. And I'll sign it. All right. All right. So let me see here. What else do we have? All right. So come to the stage, folks, and ask your question. Did anybody have anybody raised their hand to come up to the stage? Because if I have to stop and look at the screen, that just slows me down. But if you come to the stage and talk to me, then I don't have to stop and look. Says Shakira says already done. It's probably in your request. Thank you so much, Shakira. Thank you so much. We'll get you taken care of. She's put her information in there. Oh, look at that, giving me some hearts. Love it, love it, love it. Let me see what else I've got going on here. Let me see here. Let's see. Another strategy is asking credit card companies. Okay, another great strategy is asking the credit card companies to change your due dates so they can better align with your cash flow and payoff strategy. That's true. You can call the credit card companies and have them change your date. And a lot of them will let you do it right online. So you should all have, let me get this banner off of here. All right. And go to this view. All right. I'm changing my view online here. Okay. There we go. And there we are. All right. There it is. There it is. There it is. Okay. And let me put this view up. All right. And as Charles, add him to the stage there. All right. Charles, if you want to ask a question, all right, put it in the chat. I just want you to know I'm not taking you out of here, but put it in the chat if you have something you need to say, and I'll bring you back. All right, great. So there we are. All right, so let's change my view on that. And what else do we have? Let's see. Jump back on the call. Great. Arbitration is important. Is the new rate contingent upon another soft or hard pull? No, it's just if they're going to look at it. All right, the new rate is already on their screen. The new rate is already on their screen. Okay, so they're not going to pull it. They're not going to pull a. They're not going to do that. It's not a hard pull. All right, not a hard pull. That has been my experience. Not a hard pull to get a new lower rate. It's based on how you participate with their program. Okay, that's what I know to be true. All right, so Cheryl, we've done that. Okay, what is the method? Okay, got it. All right, Cheryl. Okay, I just see you got another question here. Ironically, the method you explained to lower the interest on your card is the method I use when T-Mobile overcharges me on the monthly bill. Last month, I removed approximately $185. One can apply your instructions to other things as well accordingly. That is so true. Okay, so true. How many have done that? How many have come? Listen, I don't have cable anymore, but when I did, I would say, listen, I'm thinking about switching. And anytime you're thinking about switching, guess what they do? They send you over to retention. Okay? When they send you over to retention, you can get lower rates, you can get all kinds of good stuff. All right. just because you threaten to leave, and they'll give you stuff just to have you stay. All right. So what Cheryl did was her bill was too high. Okay. And you know this when it comes to T-Mobile or Verizon or any one of those. Okay. And I've used this and I teach my clients this. They're always giving the new customers all the deals. And when your particular plan changes for the better, they don't call you to let you know. So I like getting all the services that I have coming to me, but if I can get those services at a lower cost, I will call and see if I can get that. So every time I get my renew my insurance every year, listen, I call them, take a look at this. And is there a way how can I get the same coverage on my insurance? But are there any discounts? Is there anything that I'm missing? You listen, if you don't ask, you don't get. Okay. They want to keep you as a customer. And if there's a way to lower the cost of your insurance, if there's a way to lower the cost of your cell phone bill, if there's a way to lower the cost on any of the services that you pay for, give them a call and ask. And listen, if you do that, you can lower your bills significantly. I'm telling you, it works. Thank you very much for that, Cheryl. That's a good one. All right. Okay, Juan, what you got? It says, I have to get going. All right. Let's see, on Instagram, send the info. Great. I'm looking forward to connecting with you and receiving your book. Thank you very much. All right, Juan, thank you for being here. I appreciate it. All right. Anybody else this morning have any other questions about credit cards? Okay. Anything else going on about credit cards? Because listen, I love using credit cards. I have approximately 1 million points when I add up all points from my card. I have over 600,000 points on my American Express. Okay. And when we fly using the points. We fly using, we go first class. Okay. All right. Because I got the points. And see, I run my business on these cards. I pay for everything that I possibly can on the card. Advertising, my office, I pay for that. Listen, I don't even own my car. Nope, my business owns the car. Yep. So I'm just trying to tell you that I use my credit cards for everything. And then you get, so if you get something like, if you're using American Express business, oh my gosh. So Don, but if I get the American Express Platinum business, if I get the Platinum and the Gold card, then there are fees. Okay. So let me go ahead and let me pull that up. I'm going to pull that up. I'm going to go to my credit card here. All right. Let's pull that up. I think this is going to be interesting. All right. And American Express. All right. I'm going to my account. I'm logging in. And I'll see if we can take a look together. All right, log in. What is going on? I can't get into my account because So I forgot my password. I have to do that later, folks. I can't worry about that right now. I was going to show you how you can take a look at all the benefits. So oh, you know what? Let's do this. Let's do this. Okay. Okay. Amex. Well, we'll find it this way. Amex platinum benefits. I can do. We could look it up this way. All right. All right, let me see here. Platinum card. Okay, this is good. This is good. I can show this. This is good. Let's put this up so you guys can see what I'm talking about here. All right, there you go. Okay, look at this. Uber Cash. Listen, I signed up for this. Okay, you get Uber Cash. So you can go to card.americanexpress.com and then you can look up featured benefits. Okay, $240 of digital entertainment credit. All right, I signed up for this. All right, hotel credit, I get that. Airline fee credit, I've signed up for that. Okay, let's take a look at and see if there are any. Can I get to any additional benefits? Okay, let me see. Travel, 5 times membership rewards if I book my travel using my platinum card. Okay, I got that. Let's see. Hotel credit, airline credit fee. Oh, this is a good one. $199 Clear Plus. So I have Clear and I have TSA pre-check, and whatever I paid for that, excuse me, whatever I paid for that, American Express paid me back for that. So whatever I'm paying them, American Express, the fee, listen, I get more than that back by going to this page and signing up for all this stuff and using it. All right. So I got that. Oh my gosh, American Express Global Lounge Collection. Oh, listen, I remember, listen, I was well into adulthood. I never even noticed the lounges before in the airport. Okay. Because I'm sitting out there eating expensive airport food, you know, where you're looking for a place to charge your phone, all of that stuff going on. Not anymore. Okay. Because we got the American Express Platinum, I get to go into the lounges. Plus, you can go into the Delta Sky Lounges, but you also get information on how to get into other lounges as well. So that all comes with my platinum card. So I remember the first time my wife and listen, we were married. I think we were married almost 20 years before we actually got to go into a lounge. I didn't even realize it. You know how I found out about it? In this room. You know, all these benefits I'm talking about in this room. Okay. I'm talking about credit. And I got, I learned about using the American Express Gold and Platinum. If you do a lot of travel, you want the Platinum. Gold, you get other perks as well. But I learned about that, and they were talking about going into the lounges and having a good time. And I said, listen, I've been missing out on all this all these years. So what I did was I got all my paperwork, just like Los told me, other folks had talked about here in this room, and I went and applied for my platinum card. Now I have 2 businesses, so I got a platinum card for one business. Oh, and listen, it was like, in the time it took to fill out the application and click enter, my business was approved for a platinum card. Now, they told me I didn't believe them, but they told me if you apply for other cards, it is not a hard pull. So in the space of about a half hour, I had platinum card, I had a gold card, I had the blue card, I had the credit card. I had some other cards. I had practically everything that American Express can give me. Okay, in just a matter of a few minutes, because once they do the credit check on this one business, then that business can get the other cards and it's not a hard pull. Okay, so we did that. So I got all of these cards, I got all these perks, and so hotel perks. I mean, you could go to top-notch hotels, and because of this, you can check out late, you can get free upgrades, you can check in early. Listen, there are just so many benefits to using these cards. All right, let me see, what else do I have here? Premium car rental protection. I never pay. When I rent a car, I never pay for the insurance at the car rental desk because it's covered under this card because I signed up for this. Okay. Now I don't have global dining access. I don't have that. Okay. Let me see. American Express Global Lounge Collection. I've signed up for that. All right. I have all of that. All right. So let me see. Tax deed Wolf just came into the house. You better get to this stage. We're talking about all the credit card benefits. Hey, Wolf, can you talk about that? Do you use your credit cards this way to get these points and get benefits from your credit cards? Anybody else? Come to the stage and let's talk about it. Okay. So this is a way I have used my cards to benefit me. All right. Especially the global entry. Oh my gosh. When we come back from out of the country, all right, and I have global entry, I don't have to wait in line. I just walk up to a kiosk. It takes my pictures and then I'm free to go. All right. Period. I don't have to wait to talk to anybody. That global entry is fantastic. And if you have, let me see, what else do we have? Once you sign up for Clear, it takes you to the front of the line. Oh, when you're going through, even though you have TSA pre-check, all right, Clear will get you to the front of the pre-check line. So I love that. I love all these benefits that you get from these credit cards. Listen, debit cards are, to me, emergency cards. You listen, my debit card does not even see the light of day because I don't get any benefits from that. I take it because they give it to me. And at some point I may need to use it, but right now I just use the credit cards. All right. Does anybody else have any questions about credit cards today? All right. Well, until we do, I've got something I'd like to play for you because I want to talk about something else. So let me get this ready. All right. So we help people who are well known with the P.I.L.L method. They're well known and they make good money. All right. Well known and make good money. I had a guy call me the other day. All right. And he works for a very well-respected company. And this is what he called me to ask me. He says, Don, we're moving and this house costs $2.2 million. Should I pay cash for it or should I borrow the money? Should I put a large down payment down? I said, no, don't put a large down, ever put a large down payment on the house and never pay cash for a house. Don't do it. By the time the P.I.L.L method is through with it, your effective interest rate can be 1% or less. And we can do all of that with your income. Keep your $2 million in your investment working for you. Because if we can borrow money, like the bank borrows money from us, they borrow money from us, they put it to work, they get a big benefit for it, and they pay us pennies on the dollar for the use of it. Well, you can borrow their money, okay, while your money is still working in your investment. And then you can pay them pennies on the dollar for using their money, and the effective interest rate, 1% or less. So if you can borrow money at 1% or less, if you can borrow money for 1% or less, why would you ever pay cash for anything when your cash should be making babies? All right. So listen to this from Mr. E.T., the hip hop preacher. All right. Listen to this.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
How about that, folks? Actually, Jonathan Bing and Daphne were in the house when Eric Thomas made that announcement. Oh, that was great. Daphne was there. Okay. All right. So I didn't even know he was going to say anything. Listen, I had asked, well, I didn't just ask, I had to pay him, Eric Thomas, to come speak for us in Nashville about 2 years ago. And he made that announcement. I did not ask him to say that. I'm telling you, I didn't ask him to say that. He volunteered that information on his own. Okay. So listen, folks, when it comes to dealing with debt, and understanding how credit cards work, how your mortgage works, how student loans work, you want to take some time and understand it, because even though you make good money, now Eric Thomas has commanded up to $250,000 to speak for an hour to corporations. Okay? He's not hurting for money. Why does he need the P.I.L.L method to help him to pay off his house? Here's why. Because his focus was, I want to pay the least amount of interest possible. I want to be as efficient as I possibly can with my money. So if you want to pay the least amount possible and be efficient, why don't you just take the money out of the bank or out of your investment and just pay the house off? Don't do that. And here's why. Because if you pay it off too fast, then you lose the opportunity. It's called opportunity cost. Okay? Called opportunity cost. Let me put this in here. Opportunity cost. Okay? It's called opportunity cost. All right? The loss of potential gain from other alternatives when one alternative is chosen. If you take too much cash out of your investment, making 7 to 9 to 10%, and use it to pay off a loan, and you can manipulate that loan so your interest cost is at 1%, you're losing money. You're losing money. Opportunity cost, the loss of potential gain. You got that right, Miss Daphne. You got it right. So there's a benefit to knowing what your interest cost is on these loans so that you can maximize your interest cost, and then it doesn't get in the way of using monies to make more money. You want a balanced approach to this whole thing. It's called critical point analysis. What is the point, that critical point in your finances? What's that critical point where I'm putting the right amount of money towards debt reduction and out of the money that I make, what is the right amount of money to go into my investments, whether it's real estate or the stock market or whatever, wherever it is. What is the right amount of money to put there? And it takes a ton of math to do all of that, to figure that out. What is the critical point? When I say the critical point, it means this. When is more too much? And I mean down to the penny. You can know how much to put towards debt reduction and what is the right percentage to put towards your what is the right percentage to put towards investing, so you don't miss out on either end. You want to know the exact numbers, the exact day, the exact month to do all of that in. It is amazing when you know all of that. So if that is the case, so let me see what else I got here. All right. We show people how to do all of these things. Listen, if you're watching this then see it. If you're listening, go ahead and listen. I got something else for you. Here it is. How many want to know how to pay off all of your debt in an average of 7 to 9 years? You can do all of this without refinancing, without change to your budget, without sacrificing lifestyle.
Me and my husband do the P.I.L.L method, and last year we were able to pay down $33,000 on our mortgage without feeling like we were poor. We still did tons of entertaining things and enjoyed our family.
You don't have to eat beans and rice every day. You don't have to cut up your credit cards. You don't have to drive a 30-year-old car. You don't have to sell pizzas at night to pay off your mortgage. All you need to do is pay the bank less interest. That's what we're talking about today. Here is what P.I.L.L method stands for: prepayment of principal, isolation of principal amounts, leverage, and liquidity. You understand it? You have a way of getting out of debt more efficiently. The interest rate you're quoted is not the interest rate you pay. You think you're buying a $500,000 home. The true cost of that home is what? $758,000. Total interest paid as a percentage of principal, 51.777%. That's what's going on with this loan. The ability to read and defeat an amortization schedule is not taught at any level of financial education. I need you to understand the power of a penny. You will not hear what I'm talking about from Dave Ramsey. Do you know why? Because I own the copyright. I literally wrote the book.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.
Did you hear that, folks? Listen, we had E.T. talking about the P.I.L.L method. We had Otis, all right, Otis James, all right, talking about the P.I.L.L method. He was there live. He was one of my speakers. And Tony Glenn says the P.I.L.L method is important. So listen, folks, these folks are not hurting for money. Not at all are they hurting for money. But they're saying we need to find a way to use our money more efficiently. Okay, how to use the money more efficiently is important. Let me see what else we got on here. We got all right, Ken. All right, Ken. Ken has some invites for you. Ken, how many invites you have left for Chatter?
16.
He's got 16 invites, folks, left for Chatter. You better sign yourself up. Okay, sign yourself up for Chatter. All right, and Ken has given you a couple of, he's got some invites there. So go ahead and sign up for Chatter. So do I have either Daphne or Jonathan in the house to make any comments about what's coming next? Okay.
I am in the house with you, but I am not engaged enough to know what you're asking. I'm sorry.
That's okay. Okay, we're talking about do you guys are you guys coming on talking about um, you know, teaching people how to become lenders? Are you going to talk about that today, or do you want to talk?
Absolutely, absolutely. When are you wrapping up?
Okay, I can wrap up at any time.
Oh, I don't know if Jonathan's ready. Let
Okay.
me see where he's at with the equipment, but let me come back to you. Got a couple more minutes?
Well, sure. I'm going to be here for a minute, but then people want to know about Chatter as well. So whatever you want to talk about.
Absolutely.
Okay.
Thank you, Ice.
Yeah.
I'm going to start calling you Ice from now on. Is that cool?
That is cool.
Okay.
That's cool.
Good morning, Ken.
All right, Miss Stephanie, get back to me and let me know what's going on. Okay, because I usually I only spend about 2 hours in here. I just warm up the audience for you guys. Okay. All right. So
warm them up, my tush. You get them fired up and hot in here. Here's how we like it. No, love you tons. Love you tons. Thank you.
You too, Daph. All right, folks. Listen, do I have any other questions about credit cards, about debt? Listen, I want you to know that we're not talking. Listen, this is not about people who are in trouble financially. It's not. What we talk about here at the P.I.L.L method is how to learn how to be more efficient with your money. You need to know how to become more efficient with money. Here's the thing that you need to do in the last few minutes that I'm here. Okay, you want to go to ice10k.com. Let's put that on the screen. ice10k.com. All right, there it is. Enter. All right, we're going to put that on the screen. ice10k.com. And there we go. All right. And share. Did I knock that off? I sure did. All right, I have to share it again. Sorry. There it is. Okay, there it is. So let's go ahead and share the screen. Boom. All right. So when you go to ice10k.com, the first thing you see is Eric Thomas. All right. And he says, because we no longer had a mortgage. All right. And watch that little video there. And what else do we have here? So you can scroll down underneath this picture and it says, get a savings and earnings report. So if you want to know how the big players are doing it now, they're using AI to handle their debt. Do you know we're getting calls from Hollywood? Yes, Hollywood. Okay. There is a well-known casting agent that is now a P.I.L.L method client. All right. Heard about us? And we would love to become, interest cancellation experts to the stars. Okay. So who knows what's going to happen from that? But we're getting calls from Hollywood. All right. So there it is. Get your free savings report. People who have money want to be more efficient with their money. People who have money keep their money. That's how you this is how you look at wealth. You don't look at how much you can spend. You look at how much you can conserve. You look at your lifestyle, what it can do for you, how you can make your money work for you. Instead of giving it away in interest, you can cut your interest cost by 75%, and you can find out what that could be for free. So go to ice10k.com, scroll down underneath ET's picture, and click on that link, get a free savings report. Go ahead and do it. And it's free. Somebody will give you a call. Once they give you a call, they will confirm the information you sent us, your financial information. Once it's confirmed, then we can do your report. If you like the benefit, if you like the report, okay, most of our clients save up of over $150,000 to $200,000 in interest at least, and are able to pay off all of their debt in 7 to 9 years using their current budget. And get this, I need you to listen closely, without sacrificing lifestyle. You can live well and get out of debt. How about that? Okay. So manage your finances. If you're a real estate investor, It says, Don, I'm not interested in paying off my houses. I'm not. Okay. What I want is I just cash out refi. Well, then use us to learn how to cash out refi 10 to 15 years sooner. Get equity at 4 to 5 times the regular rate. Grow your equity faster and cheaper, more efficiently. So use the least amount of money you possibly can to save the maximum amount of interest that you can, so that you can invest more money sooner. And the interest that you didn't pay, we're going to track for you so that you can get your equity thousands of dollars cheaper for the same property. And the money that you didn't spend in interest, don't go out and blow it. Invest that money too. We can show you how to do all of that, whether it's for real estate investing or whether it's for you want to acquire your own personal home. Pay off, pay off your credit cards, pay off your student loans, pay off your mortgage. It doesn't matter. Learn how to leverage your money. Learn how to leverage your income. When you leverage your income correctly, you are well on your way to creating generational wealth. Stop spending your money unnecessarily just to live. Everything, and I mean everything, that you've ever been taught about how to handle debt, throw it away. I mean now. And start watching our videos on YouTube, start watching our videos on Instagram, and start learning what no other source can teach you about how to handle debt, because we're the only ones that focus on how to minimize interest cost. Don't just learn how to get the credit. Don't just learn how to repair your credit. Don't just learn how to get business credit. Don't just learn how to get the maximum amount of credit that you can possibly get. Don't just learn about that. Learn how to leverage it to make more money and pay the least amount of interest that's mathematically possible, using algorithms, using AI to guide you like financial GPS to building wealth. You can do that starting today. Get your free savings and earnings report, ladies and gentlemen. Okay. Says, is velocity banking a real thing? Yes, velocity banking is a real thing, but it doesn't tell you how much to borrow. It doesn't tell you when to pay. It doesn't tell you how much interest you're saving. It just says that you can save interest. It just says that you can pay off faster. And it's true. But can I give you an example? If you want to see it, we have a new client where velocity banking has gone wrong. Let me put that. I'm going to put that on the screen. Okay. Let me put that on the screen. All right. Let's see here. We're going to click here and let me find that example. We call it velocity banking gone wrong. Here it is. All right. There it is. Let me pull this over here. Okay. Here's somebody who is trying to use velocity banking, because when you go on YouTube and try to learn how to use complicated financial strategies without actually being taught, it can get you into some serious trouble. Now, look at this. Here's a person that has a $634,000 mortgage. Obviously, they can afford to pay for it because it's $634,000. They can afford to pay for that. They have some other loans that are $197,000. But they have 12 credit cards they were using for velocity banking, and it just got away from them They have a total on 12 credit cards of $200,000 in credit card debt. Look at that. They were trying to use velocity banking. Now, these are smart people. They have good incomes. They have great jobs. But if you don't have a system with there was no guardrails. When you use the P.I.L.L method tells you exactly what to do and when, and you don't need 12 credit cards. But listen, we're going to help them. So they had over $1 million in debt, and they gave up on velocity banking because it wasn't working for them. Okay, because they had no way to track how much interest they were paying and when to pay and how much to pay. It just got away. So on this debt, here's what the bank wants them to pay: $692,286 in interest. That's how much interest they are scheduled to pay. They signed up for it. They put their name on the dotted line to pay this much interest, $692,000. They brought it all to the P.I.L.L method. Okay. You see, this is the report that you'll get. You get one that looks exactly like this with your numbers. All right. So what did they find out? Instead of paying the bank $692,000, we're going to use their current income, how much money they're making now. And listen to this. We're not using a dime of the money they've already saved, not one dime. Okay. We're not asking for any of that. But by using their income more efficiently, they're only going to pay $179,954 in interest on all of this debt instead of $692,000. Okay. Now, let me blow this up just a bit, just in case you can't see it. I'm going to put it up here. Let's see, make this bigger. I need you to see this. What interest rate would you have to have across the board to pay this small amount of interest on all of over $1 million worth of debt? They would have to have an interest rate of 1.10%, 1.1%. That is your effective interest rate when you understand how to use interest cancellation, when you follow our program. Our program, our algorithms, our opportunity cost calculator tells you how much money to move, what month to move it in, what day of the month to move it on, and which loan to attack out of your discretionary income. That's after you've paid your bills. That's after you have spent money on your lifestyle. Yes, we don't tell you not to live a great life. Okay, life is too short to say you can't go anywhere, you can't travel, you can't do this or do that. Life is just too short for that. It says so if you want to see what we're doing, go over to YouTube so that you can see this. Okay, go over to YouTube so you can see it. So $179,000. Okay, yeah. So we got the link in there so that you can see what's going on here. I'm sorry. I should make that announcement more often because people come into the room new all the time. All right. So $179,000. And what is the savings and interest? $500,000. That's $500,000. $500,000. One more time. $500,000 that they're saving. Oh my gosh. $500,000. So listen, folks, do you want to save that kind of interest? All right. You want to save that? Do you want to save that kind of interest today? All right. That's a 74% interest reduction using their current budget, and they're still living well. Oh, instead of 36 years to get out of debt, they can pay it all off in 9 years and live well while they're doing it, and take that money that they didn't give to the bank, watch this, and turn it into an extra $4 million for themselves. Stop giving your money to the bank and start building generational wealth with that money. Don't you think it's time out that we've learned how, not just how to get the credit, Don't you think it's time to learn how to maximize its use, how to leverage it properly, how not to pay all of that interest? The interest that the bank is asking for, ladies and gentlemen, is a suggestion. You don't have to pay all of that interest. You can pay them back and make it impossible for them to charge you interest. We show you how. Take the interest that you didn't give them and invest it somewhere else. This $4 million that this family could make from the interest they didn't pay the bank, this is at 1% return on their money. 1%. The national average is 6 or 7. If they can turn that interest into $4 million at 1% return on their money, what could they do with 6 or 7 or even 10% return on their money? I'm just saying. Okay. And there's a whole arm of P.I.L.L method that does nothing but help you to grow your wealth. All right. Let me see what else we got here. Diva T, the interest is a suggestion. No, it's a cost. Okay. Yeah. The amount of interest that they want, Diva T, is a suggestion. All right. It's suggested that they pay $692,000. But this client is only going to pay $179,000. Okay. The $692,000 is a suggestion. You don't have to pay it. Most people never get to learn how to read an amortization schedule. We teach you how. Okay. We teach you how. Let's learn how to read an amortization schedule. Let's learn how not to give all that money to the bank. Okay. All right, folks. Ken is still putting chatter invites in. All right. Daphne, are you back with us? Because I'm getting ready to get out of here. We've got a whole bunch of people in here ready to learn some other stuff about how to become a business purpose loan broker. All right.
It's a lot of words, isn't it? A business purpose loan broker. I'm telling you, it's a lot, guys. It's a mouthful. It really is. Don, I messaged you on the back end there.
Yep.
So, you know, you got that.
Okay.
And Ken, I just wanted to say to you, a special shout out. Thank you so much. He's given out his personal invites today in the chat. I haven't had a chance to look. Is everyone that's wanting a chatter invite getting one? If you haven't, make sure you speak up there in the I guess in the room chat. We want to make sure everybody gets over. And then I'm going to hand this back over to Don. Okay.
So listen, what do you got? Listen, what do you got about chatter? So tell us a little bit about it and what that has meant. Do you have time to talk to us about
Tell you
that?
a little bit about chatter?
Yeah.
Absolutely. Sorry, like I said, I'm working on something here in the background, guys, so I apologize. But chatter gets me all fired up. The truth is, listen, I got a chatter room going on over there as well. Jonathan and I have one, we're all over the place.
Yeah.
I joke around, but chatter, I love chatter. I feel like most folks do know, but sometimes I take for granted that not everyone does yet. So listen, chatter is similar to Clubhouse in the sense that it's a social audio, right? It's a social audio app, but it's a social audio app plus so much more, right? And I mean that just it has video features. It's it's still in beta mode, but we're having a lot of fun. And there's there's so many shows every single day going on over there, and it's different. It's not these over here is kind of like houses and clubs, but over there the app is simply different. And I mean that Instagram's not Facebook and Facebook's not TikTok. Like it's a different animal. And what does that animal look like? Well, it looks like let's see, how do I say this? People over there have their own channels, right? Or have the option to have their own channels. So just like over here, where you can come in and listen and consume content, but and just like over here, you can create content. But over there, I feel like it's a lot easier for folks to create content. And I also feel like, these are my personal opinions, I feel like it's a little bit easier to connect to people on a real human level. And I say that because we're missing a layer here without that video. And sometimes it's I don't know, on any of these platforms, it gets easy to kind of become a keyboard warrior, and I use that loosely, but you guys know what I mean. You lose part of that human effect when we don't see people, and for folks like me, it's a little bit easier just simply to communicate when I have that extra layer. A lot of things are missed when you don't have that, like, oh, when to jump in, or you can't see someone's facial expressions, and or you say a joke on stage, but not everyone can get to their mic, and you're like, oh, crickets. So it doesn't feel like that. It feels a lot more engaging over there. You can have multiple people on video at the same time, and that's an optional feature. You can have just social audio rooms like we do in here. But the channels is my favorite thing, because what I mean by channels is, how do I say it? So there's a Debate the News channel, right? There's a Debate the News channel. Jonathan has that, but then he also has a channel that's just the men channel, right? There's a wonderful channel over there that's a football league, and we're doing fantasy football, and we watch football together. We're all doing a draft, and so we sit on we're watching the game together, we're doing a draft in the background, we can talk over it, we're streaming that in. Like, it's a lot of fun. You feel like you're sitting there, like we can all get together on a Sunday afternoon, and that's what I mean. Like, we don't have those options over here. Like, there's just a lot more things to do. Those channels that I talk about, a lot of people are using them like literally a network, and a network of channels for like you would see on a TV show. For example, some folks have studios set up in their homes, and some people are actually renting out studios, and they're live streaming from multiple angles, and it looks just like you're watching something on TV. And these channels that you can have, I think, up to 5 over there right now. And of course, that may change. Like I said, this is in beta. But 3 of those channels you can monetize, and it's set up right through the app. Like, there's no extra thing to do or anything like that. So just the fact that you can monetize with your content, and then you can record that content, and you can clip it, is what we used to call it over here. It's different over there, but I'm just trying to explain to you guys. And so you can take these clips and you can share it out to your other social medias. So if you're a guy like Don that's really great at marketing, he's everywhere. That omnipresence, like, holy cow. Well, if you're not as good as Don, but you want to be, so now this is one of those things that just takes it's another tool in the tool belt, and it takes that and pushes the easy button, right? So now you can stream out just because you're on Chatter, and you can push that out to your other channels. It'll clip these things for you. Other people can clip you by video or by audio when you say something cool on stage, and then they share that out, and all of a sudden you've got a viral clip. And so I just see this really growing out other people's businesses and their brands, and just content and communities, and whatever it is you're trying to genuinely build, and whatever you're passionate about. I just feel like the app amplifies that for everyone in an easy, efficient way. And so anyway, obviously I get super excited about it. I could talk about it all day, but I hope that gives you a kind of an overview. And like I said, if you don't have, it's in beta mode. We have moved from private to public beta, excuse me. What does that mean? That means that if you go to the App Store, right, you can download Chatter right now. So you can download it, but you still, because it's in beta, you still need that invite to get in. So what you're going to want to do is go to the App Store, just download the app, and then you're like, oh my gosh. Well, that's where you need to get one of those invites. And so, like I said, if you don't have one, just say that you'd like one in the chat. I don't know. We got to give some. I'm not really good at these call to actions here. Yeah. Put a pink heart. Put a rocket. There it is. Put a rocket in the chat, and we'll get you an invite today, and we'll get you over. And like I said, as soon as you get over there, jump in. There's a Debate the Newsroom that we've had running since, holy cow, since last night, live streaming the debate. And yeah, the conversation literally went all morning, and so we changed the title, and it's just still rocking out. Also, and I'll land with this, guys, but because I do want to see a lot of your faces over there, right? It's hard right now splitting between the two, coming over here on Clubhouse and then being over there in Chatter. So I really, really, really want everyone to come and join the fun. Anyway, I say all that to say this. Right. Get your invite, get over there. And then once you are, I just want you to know kind of to navigate yourself until you really know what's going on. Right about 8 p.m. every night, there's a town hall, right? So come to that town hall and then get into one of the Chatter 101 rooms, and then you'll know all the things that you need to know. Okay, with that, I'm going to close. I love you all. Thank you for the space, Don.
One second.
John's back. All right, listen, I think we got it rocking now, John.
Jonathan, was that you?
Jonathan,
Yeah, I
don't
just
play with
got it.
us, sir. We need you. Just kidding.
And listen, I'm putting one of my invitations for Chatter in here right now. There you go.
Oh, thank you.
That's from me. Okay, that's one of my invitations.
Listen, you guys, and what's cool is when you get an invitation from someone, their name will be at the bottom of your profile, right? So I don't know if it's it's not important to some people, but to some other people it's cool. So if there's somebody you want one from, reach out.
All right, and I'm putting an invitation over on YouTube and Facebook right now. So we're putting that out there. So copy that. So we're putting that online.
You know what? I'm going to say this too. I don't know who's in this room. Oh yeah, we got quite a few guys. So I'll say this too. For those of you who may have only been over here on Clubhouse for, I don't know, a few months, a year, 2 years, let me tell you, there's a few of us that have been on here for 4 whole rocking years, right? 4 whole years. And I say that to say this. There's something very, very special and unique and powerful in being part of that very that inaugural community, right? And so again, I encourage you, get in there now, even if you don't know why you want to be there or what you want to do, get over there in the early stages, and I promise you that'll help you in the long run.
All right, ladies and gentlemen, thank you very much, Daphne. So we got invitations out there. Ken is putting some invitations out there. I put an invitation in there. So folks, get signed up for Chatter. All right. So folks, I'm getting ready to get out of here. I've got to get to work. I do the first 2 hours in the morning. But listen, look for opportunities to get back in this room to get more information, especially about how to become a business loan broker. All right. So a business purpose loan broker. And listen, you can make a lot of money by selling money. Jonathan's going to talk to you. Jonathan and Daphne talk to you about that. All right. So I don't have any other questions. I'm getting ready to get out of here. So Jonathan, I think, listen, one thing that Daphne touched on, all right, about Chatter is the video component. This is why I use video when I'm doing my presentation. All right. And Jonathan just put up the Play Excel up top. Jonathan, are you ready to talk about that a little bit?
Yeah, Don, I'm actually trying to get everything set up right now.
Okay.
And getting Twitter online. But yeah, I'm ready.
All right, folks. I'm going to get out of here. And I might even play a little bit of music until Jonathan is ready to talk. But, we'll do what we got to do.
No, Don, I got it set up. I'm going to go with Twitter. I'm just connecting Twitter.
All right. So he's got it. Ladies and gentlemen, thank you so very much for spending time with me today. My name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. Go to ice10k.com, get your savings and earnings report today. And also make sure that you you subscribe to our YouTube channel and follow us on Instagram. All right. We're out until next Wednesday. See you guys later. Thanks, everybody.
Thank you. Don, you're so deeply appreciated. All right, guys, I'm going to pass this mic over to Jonathan. John, are you ready?